Hello, it's Tanisha Souza here, and welcome to our YouTube channel. Now I'm going to start a new series on common investing mistakes. And so a lot of people have asked me to talk about the things that I see people making the most mistakes on, so we're going to start that today. The first thing that I want to talk about as far as one of the biggest mistakes investors make is speculation. Now, a lot of people don't even really know what speculation is. I've done it before. However, it's extremely risky, and it's something that I think is one of the biggest mistakes that investors can make. So if you want to be a true investor, somebody who actually makes significant money investing, I would suggest steering away from speculation. So first, let's talk about what speculation is. Speculation is, in essence, where you are risking your capital on the belief that something will be worth more in the future. And this is related to another mistake that I'll talk about in just a minute. So speculation really is a highly risky type of venture where you're thinking that you're going to buy something low and then you're going to sell it high. Sound a little familiar? Sounds a little bit like what most people do in the stock market, actually. However, in this case, I'm talking about purely short term. So I'll give you a couple of examples. The first one is Chris and I, when we first got married, we speculated in real estate. So we purchased a property on foreclosure, so we got it for a good price, and then we fixed it up and we sold it at a higher price. So that worked out for us, but that's what's called real estate speculation. I saw this thing on the internet, I think it was a little cartoon, and it said that speculation is like using your money and buying gold on Monday, and then on Wednesday, selling that gold and making a boatload of money. And that's basically what speculation is. So you can speculate in any type of market. You can speculate in the stock market, in the real estate market, in the crypto market, in gold, in other commodities. It doesn't matter what it is. If you are buying for the purpose of quickly selling or in some short term selling at a profit, then that is what's called speculation. There's really not much difference in that than winning the lotto, right? Buying a lottery ticket and thinking that at some point it will pay off. Now, you can make money doing it. Like I said, we've done it, but it's not true, what I would call true investing. True investing is where you invest your money for continued gains, where there's a strategy involved that you actually have some control over. For the most part with speculation, there's so many variables outside of your control that is part of what makes it risky. If you think about within the stock market, all the different variables that are outside of your control. For example, if you're investing in a mutual fund, for instance, there is the mutual fund manager who you have no control over. The mutual fund manager is deciding which companies to invest in. Each of those companies has their own CEO and they have their own challenges. So for instance, how did those companies fare during COVID? Did they have to take out a PPP loan? Were they shut down by the government for 6 months or longer? Were they shut down or were they forced to shut down permanently? I mean, there's lots of things there. So all of those variables you have zero control over, and you are yet believing that investing in this particular mutual fund will gain you a profit in the future. Let's talk about let's talk about crypto. Cryptocurrency, the way most people invest in it, is highly speculative. And the reason for that is they're buying it for the hope that it will be worth more in the short term, or some people believe in the long term, in which case they're still hoping that 20 or 30 years down the line, it's worth more than what they paid for it. When you look at Bitcoin, for example, Bitcoin has been so crazy volatile and it's worth a ton now. And so there are people who are thinking, wow, if I had invested a year ago or 2 years ago or 5 years ago, then I would be a Bitcoin millionaire right now. And that may or may not be true. But the point is you have zero control over the price of Bitcoin or any cryptocurrency for that matter. So anything that you really cannot control and that you're hoping and crossing your fingers that at some point in the future, usually short term, you believe it'll be worth more, that's how you're going to make your money. So it's on short-term capital gains. Typically, sometimes it could be a little bit longer if you hold on to it a little bit longer, but in essence, it's still very speculative. All right, now let's take another example. Let's say that one of the things that you're thinking about doing, like for us, we did it to pay off my student loan debt. So we actually purchased on a foreclosure, and then we sold it at a profit. Now, what would have happened if the market crashed or we had held on to that property, then COVID hit, and we weren't able to finish renovations on it, and we had to hold on to it for an indefinite period of time? We would have had, incurred a lot of costs, a lot of holding costs during that time period, and not have been able to actually, remodel or rehab that property. So there are additional costs that could have happened that we would have had no control over. I'm sure there's a lot of people that tried to do that, and after COVID hit, it kind of messed them up and they weren't able to do it for a while. In fact, I know people who do that for a living, and they had to stop, of course, during COVID. So with speculation, there's no, I shouldn't say guarantee, because nothing's guaranteed, but there's no systematic income stream that's coming in on a regular basis, and therefore that's part of what makes it extremely, extremely risky. Now, I'm not saying that you should never do it. What I'm saying is I believe that's one of the biggest mistakes investors make, especially for beginners, because beginners really need to develop a system and a strategy for creating regular income streams, and that could be from many, many different sources, like even the ones that I'm talking about right now. Now, there are other ways to invest, obviously, in real estate, in crypto, in all kinds of different, in the stock market, that would actually generate income for you on a regular basis. And that is what most investors, if they want to be true investors and not gamblers, to actually make more money. So again, the first mistake that a lot of investors make, especially beginners, is investing on speculation. Speculative investments are highly risky, and so I would suggest, again, going after a system and a strategy for developing income instead of hoping and praying that someday that investment will be worth more in the future. So that's it, and I hope you'll join me for the next video where I'm going to talk about common investing mistake number 2. Thank you, and I'll see you next time. Take care.